Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Canoo, ticker symbol GOEV. And I am recording this during pre-market on Monday morning, March 11th. And here we are looking at the weekly time frame. And I didn't really want to go over too much here. I just wanted to point out that it has over a long course of time, just been bleeding down, having hit a low, all-time low over the course of the past week of $1.84 after having a reverse split. So I also did want to go over that. And so on Friday, March 8th, Canoo closed at a price of $2.13, being down just under 6.5% on the day, going up a little bit, almost a percent in the after hours and pre-market trading, actually now about break even. And and so I just kind of wanted to go over where price is and in relation to this reverse split, how I feel about that, where I could see price going moving forward. And so I have to say that I was expecting this to be a 1 for 20 reverse split. So every share would basically, every 20 shares would then be combined into one. That's what I was expecting, just as far as math goes. If you have 20 shares, you then have one share. If you have 100 shares, you then have 5 shares. That math just kind of made sense to me, especially because at the low, it was around 8 cents. And then, that would then be, if it was a 1 to 10 reverse split, that would be 80 cents. That is not above a dollar. So in order to get it above a dollar, it would need to be a 1 for 20, and that would put it at $1.60. That math just made sense to me based on that low. And so seeing it as a 1 for 23, that just kind of rubbed me the wrong way. Like, or is that additional, 3 shares, that additional dilution, concentration really of those shares into, is that really going to make a difference? I would think that 1 for 20 would be enough. And so, yeah, it just made me feel like, well, I mean, if 1 for 20 is not enough, why is 1 for 23? Why didn't they do 1 for 25? Then if you have 100 shares, that gets converted to 4 shares. It just makes more sense to do 1 for 20 or 1 for 25 or 1 for 30. Why 1 for 23? And so I feel like that's not going to make a difference. I feel like that was a silly decision. And I unfortunately think that price is likely to continue going down. But maybe I'm wrong. Maybe this reverse split, the 1 for 23, is exactly what the company needed. And maybe it is going to start making highs or breaking out of the downtrend that it's been in for a while. But maybe I'm wrong. And so anyways, I did want to go over some of the levels I had previously gone over, but then adjusted for this reverse split. And so really in the last video that I put out last week, I did do this Fibonacci retracement, really looking for extensions to the downside. And I had seen this one, the 1618, the extension here at a price of $2.61.6. Now current price is trading below that. And so I had also gone over the 2618 extension from this retracement. And if I adjust the y-axis, that would put price at just over a dollar, at $1.08.1. And so, I feel like price might be going down to that level. And so I had previously mentioned that I did buy some shares. I accumulated some around this level, really at a price of pre-split. 10.5 cents. But I decided to offload those, for my personal decision, my risk tolerance, small number of shares. So I didn't really, I wasn't risking that much, but I didn't want to be put in the position of, oh, it dipped down to 108. I'm going to accumulate more. And so I felt like it was better for me to just take it off the table and I'll wait and see what happens. And, thus far, following that reverse split, we did see, or I guess leading up to that reverse split, we did see a bottom at 184, which I believe was around 80 cents. The math is difficult because it's a 1 for 23, not a 1 for 20. But I believe this was, 8 cents. That was around 8 cents. Yeah, it has gone up since then, so maybe that's good. So I do think that $1.84 is a key level to be paying attention to. If we see a close below that level, I don't think that looks so good. And if we see another close below that new low, then, I definitely think this is going down to 108, and I just feel like the risk keeps increasing. So I do feel like this has just gotten to be even riskier, even after the reverse split. I'm just not convinced by 1 for 23. I would be more convinced by 1 for 20. I'd feel more confident if that was the case, that the board felt that the stock price would be going up. But a 1 for 23, to me, it's like, why didn't you just do a 1 for 30? I mean, that would have made more sense. So anyways, I'm going to stop going on about that. Levels to the upside that I think are going to be important for Canoo to reclaim. As you do note, I do have this yellow line here at $1.40.1, or really, I mean, you can think of that as $1.41, just round it up to be more conservative. That is a level that we did consolidate at, and then we broke below, and so I do feel like that will be a key level to reclaim. As you notice, the past couple trading days on Friday the 8th and Thursday the 7th, we did get wicks above that level, but we could not close. So that suggests to me that is a key level of resistance, and not being able to get closes above it suggests a lot of weakness, and that further downside is likely. In all honesty, it sucks. But, with that, we also do have these other wicks, to be paying attention to. And so I have this orange line drawn at the high from Thursday, which was at a price of $2.50.7. And so now, if we do get a close above the yellow line at 240, 241, I think that's good. But really, in order to show some strength, we need to get closes above these previous highs. And so that would be getting a close at or above $2.51, and then getting a second close at or above that previous that high that has not happened yet. And so I do feel like if we can't reclaim 241 this week, if we can't reclaim 251, then I definitely feel like further downside is likely, which sucks. And I do think that, another level that would be good for the stock to reclaim is that 1618 extension at a price of $2.62. So if we can get above those levels, if we can get above the highs of this week, which would be right around a price of 271.4 was the high on February 28th. If we can get a close above that level at 275, I think that'd be really good. I think that suggests some strength. But thus far, I drew this channel here, not really to show much from a technical perspective, but just to show that, going back to October 2022 for more than a year and a half, the stock has just been in this downtrending channel, dipped below a little bit. But really, I mean, if you think about it, the only really good buying opportunities the past year and a half was when this was in the red part of this channel. And, because it's been fading for so long, if you buy here, let's see, in March of 2023, so a year ago, you could have seen some upside here, but then that would have been short-lived, upside here. And, now current price is below that. So I just feel like this is a really risky one. If you guys do still want me to make videos on it, I will still try to, share my non-biased opinion, or at least attempt to make it non-biased. But just looking at the chart, and really from my experience, having held Lordstown Motors, which was ticker symbol RID, I ended up accepting a pretty big loss with that because I recognized it was fading into nothing. And so, the EV marketplace is saturated with a lot of companies, some of them great, some of them not so great, some of them with a lot of potential, some of them with a lot of potential that may not get realized. And, Lordstown Motors was one that, failed. And I don't necessarily think Canoo is going to fail. I just think it's risky. And and so I just feel like with it having traded, under $1 for so long, and this reverse split being 1 for 23, I just think it seems risky. If you guys do still watch these videos, if you still want me to cover it, I'm happy to, but I have to say, I think it's going down. I think it's a bad decision, but I can try to inform on levels to the upside that are key to claim and levels to the downside that might be good dip buying opportunities, but they could just be, a continuation in this long-standing downtrend. But those are just my thoughts, and I hope they were helpful for you. And if you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and good luck trading this week.